Hi there, how are you? Welcome to the April edition of the Simic report. First quarter 2021 behind us now. We've wrapped that up. What we want to do is use this video and compare what is 2021 looking like so far, the first quarter of it, now that we've finished that up. How does that compare to what was the balance of all of 2020?
Yep.
What was the year of COVID, a tumultuous year? We all like to think COVID's behind us, hopefully. But let's see how that's looking, and we're going to stick with tradition. We're going to dive straight over to property management. We'll come back over to sales, and then we'll wrap it up. So Bernadette, 2021, first quarter, property management. What's happened?
Interesting quarter.
Yeah.
Normally January, February, and it is tradition that it is the peak season of property management. We found that definitely was the case this year, but it did definitely take it to a newer level.
And then some.
Exactly. I'll go through some statistics first, and then we'll discuss a little bit more about it. We conducted 507 inspections. We had 1,758 tenants inspect these properties, 599 applications, 1,073 applicants, 80 properties were leased, and on average 7.5 applications per property. So the amount of tenants that we had come through these inspection homes were anywhere between, say, 50 to 100 people actually walking through the door for a 10-minute inspection, which is a
staggering number.
It is.
To have, and I think we need to elaborate. 10-minute inspection. You got 10 minutes, and you're trying to usher this many people through. Now, obviously, I'm sales. We've got David, who's our leasing consultant. I mean, I had to assist him as well, just to help. When you've got that many people standing at the front door, we're trying to provide a COVID-safe environment with only 20 people at the property at any one time. You've got another 50, 30, 40, 50, 60 people standing out the front. You're ushering the people that are inside the property out to provide the ability for the people outside still waiting for them to see the home. It was just staggering. We've not seen it in 18 years of real estate, those kind of volumes.
What's obviously I guess looking at these numbers is that, you know, we've leased 80 properties and we received 599 applications. So that means that there was a staggering amount of tenants that actually missed out on renting through our agency. Well,
you've got, now these are applications. So there's 1,073 applicants. So within those 599, obviously a majority of applications have more than one applicant to it. It could be two, it could be three. But the reality is 599 complete applications for one property. With only 80 properties leased, there's a shortage of about, 519 if my maths is correct. That's a lot of applications missing out on properties. So technically speaking, if we had another 500 properties odd available in that quarter, we just didn't, because it's just a cycle of when they're available, they could have been rented as well. It just shows you that shortfall of how many tenants were trying to secure a rental property.
So it was definitely a busy quarter, one we won't forget. I'm sure that you would have experienced that as well, Dennis, in sales.
It was, and it's interesting because you look at when you have situations like that, you see pressure on prices. So I know within the rental space, if the property was up for rent for $600 a week, we started seeing tenants applying higher than asking price, $620, $630, $650 a week, to try and secure the property because it was so competitive. Some properties would have 20 applications as soon as it goes live. So very competitive space. Now, we've been seeing that in the sales space for the past probably 6 months. So whilst we finished the quarter this year, it was happening in the last quarter of last year. A very strong demand from buyers, but the supply of available properties for sale were heavily reduced, and we're still seeing that today. There is a shortage of available sales stock. Now, that has been underpinned or driven by what we call fear-mongering from the media, talking about the financial cliff that was coming, so owners were not confident to place their properties on the market. Therefore, there was a shortage of stock. The number of buyers was significant. Now, the reason you had those numbers within property management, we saw a 7 to 9% change of ownership within investment stock. That means landlords have changed the ownership type within that property, i.e. they elected to sell their investment property or they moved back into it. Therefore, it's no longer an available rental. So that's come out of the rental pool. In addition to that, in an average year, we will see in the sales space 20% of all properties sold will be sold to an investor. That's a normal year, 20% constant supply within the rental space, just to keep things at a norm. That practically stopped last year. There were literally no investors buying last year because of what was being spoken about in the media. The tenants don't have to pay rent and all this sort of stuff. investors just weren't looking at properties as an investment type.
I think it scared a lot of people off as well.
Absolutely, but however, the number of tenants didn't change, but the number of buyers didn't. So owners were not confident in putting their properties on the market, shortage of stock. Investors were scared of the financial cliff that was coming in September that never happened. They kicked the bucket down the road to March, and that's not going to change again. Like we said, it wouldn't happen in September. So all of a sudden, you now have this undersupply of stock in sales, as you had in the property management space. You've got a 30%, nearly 30% drop in available rentals, which underpinned what happened in January, February. We've got a shortage of available sales stock, somewhere around 20 or 30% from year on year. All of a sudden, number of buyers have stayed the same. Shortage of stock, pressure on prices. Now we're seeing owners reading about it in the media about how strong the sales market is and electing to make the decision to sell. They've got confidence that September wasn't going to happen. Now's the time to sell. So they're placing their properties on the market with more confidence. But what we're seeing is, who is the buyer type? The buyers are owner-occupiers. The investors are slowly returning back to the market. So if you're thinking of selling, you need to think about, who's your buyer going to be? If your buyer is an investor and you've got a property that is geared or engineered towards an investor, i.e. you have a tenant that is more than a short-term lease. Short-term lease remaining is 1 to 2 months. If you have a lease longer than 2 months, then your chances of securing a buyer is very, very minimal. It's reduced. The investors are slowly returning to the market. However, they're focusing a lot on higher end stock, homes, even in the prestige space, $1, $2 and $3 million as an investment property. There's still not enough strength in the market for units and townhouses for investors to be looking. We think that'll change with the heightened rental returns, lower interest rates. We think the investors will start to come back a lot stronger than they were last year. However, they're still at a reduced level. As owners, sellers see more confidence in the market, they will also be returning and placing their properties on the market with more confidence that they're going to achieve an outcome. Now this, I believe, for the balance of 2021, so this is now what we think the rest of the year will be. Your world's very much normalising now until your next little mini period between June, July.
Correct,
Outside of that, very normal world. Our side, I think with the return of investors, that's going to combat what I think is going to be an extra supply of stock as owners feel confident to place their property on the market. So as more owners come to the market, those buyers are going to absorb that, which I think is not going to reduce prices, but it's going to take the heat out of the market. And as more come on, that will reduce that heat. I think the market will continue to project into that direction, but not at the rate that it's been doing over the last period of time. So it's an interesting space. We'll watch it with great anticipation and we'll provide you the feedback as soon as we get it. But if you have any questions regarding my world in selling, sales in general, or property management with Bernadette, feel free to call us in the office on 3638 4700. We're more than happy to answer your questions. There's no such thing as a silly question. We're here to provide the feedback and advice. Otherwise, we look forward to having a chat to you in the May edition of the Simic Report. We'll see you then. Cheers.
Thank you.